What is the difference between VFIAX and VOO? A question that many investors often find themselves pondering. Both VFIAX, or Vanguard 500 Index Fund Admiral Shares, and VOO, Vanguard S&P 500 ETF, are attractive investment options that closely align with the S&P 500. These funds provide exposure to the top US companies, offering a diversified equity approach for investors. But how do they differ? What sets them apart? Let's delve deeper into these two investment options. First, let's explore the Vanguard 500 Index Fund Admiral Shares, or VFIAX. This fund is designed to provide investors with exposure to the top 500 US companies, as it aligns with the S&P 500 index. When you invest in VFIAX, you're essentially buying a small piece of these leading companies. This makes the fund an excellent choice for those seeking to tap into the growth potential of American business. VFIAX is categorized as an index and a large blend asset. As an index fund, it aims to replicate the performance of a specific index, in this case, the S&P 500. As a large blend fund, it includes a mix of value and growth stocks, providing a balanced risk and reward profile. This blend of assets offers a diversification that can help mitigate risks and smooth out returns over time. One of the standout features of VFIAX is its low expense ratio. At just 0.04%, it's one of the most cost-effective ways to invest in the S&P 500. This low-cost approach means more of your money is working for you, potentially leading to greater returns over the long term. The minimum investment for VFIAX is $3,000. While this might sound like a lot, it's actually quite reasonable when you consider the broad market exposure and potential returns this fund offers. And for those looking for more flexibility, VFIAX is also available as an exchange-traded fund, or ETF. This version of the fund, known as VOO, allows for intraday trading and has no minimum investment requirement on the secondary market. So whether you're a seasoned investor or just starting out, there's a version of this fund that can work for you. So, VFIAX is a balanced risk/reward investment option that suits a diverse range of investors. It provides broad market exposure, a low expense ratio, and flexibility in how you can invest. All in all, it's a strong contender for any investment portfolio. Now, let's turn our attention to the Vanguard S&P 500 ETF, or VOO. This fund is a mirror image of the S&P 500, which means it holds the same securities in the same proportions as the index. This strategy allows investors to gain exposure to a diversified equity approach, encompassing 500 of the largest US companies. The VOO is categorized as a large blend fund, which signifies its investment in a mix of value and growth stocks from large cap companies. This blend aims to offer a balanced risk-reward profile that suits a wide range of investors, from those seeking growth to those prioritizing stability. One of the key attractions of VOO is its impressively low expense ratio of just 0.03%. This is one of the lowest expense ratios among all exchange-traded funds and mutual funds. As we've mentioned before, a lower expense ratio can significantly enhance your returns over the long term, as more of your money is left to compound and grow. In addition to its low cost, VOO also offers flexibility. Being an ETF, it can be bought and sold throughout the trading day at market prices. This intraday trading flexibility is a unique feature of ETFs, providing investors the opportunity to respond quickly to market changes. Moreover, VOO is also available as an Admiral Shares mutual fund. Admiral Shares are a class of Vanguard mutual funds that offer lower fees compared to their standard counterparts, making them another cost-efficient option for investors. Lastly, it's worth noting that VOO has recently displayed a 30-day SEC yield of 1.39%. The 30-day SEC yield is a standard yield calculation developed by the US Securities and Exchange Commission that allows investors to more fairly compare funds. Therefore, VOO is a cost-effective and flexible investment option that appeals to cost-conscious investors. Having explored both VFIAX and VOO, it's time to compare them. Both the Vanguard 500 Index Admiral Shares, VFIAX, and the Vanguard S&P 500 ETF, VOO, track the S&P 500, offering investors broad exposure to top US companies. However, their structures and costs present unique advantages and differences. Let's talk about expense ratios first. As investors, we're all too familiar with how these seemingly small percentages can significantly impact our returns over the long haul. VFIAX sports an expense ratio of 0.04%, while VOO shines with an impressively low ratio of 0.03%. While this difference might seem minuscule, over time, it can add up. Lower expense ratios mean more of your returns remain in your pocket, compounding to potentially higher balances in the long run. VOO's marginally lower expense ratio could, therefore, tip the scale in its favor for cost-conscious investors. Now let's move on to the benefits of each fund. VOO, being an ETF, provides the flexibility of intraday trading. There's no minimum investment requirement on the secondary market, and it offers a variety of order types, real-time pricing, and bid-ask spread efficiency. These features make VOO a versatile choice for investors who appreciate the fluidity and flexibility of ETFs. On the other hand, VFIAX, being a mutual fund, has its own set of advantages. It allows for simplicity with no brokerage account needed, and features automatic investment plans, fractional share purchases, and dividend reinvestment plans. These features make VFIAX a straightforward choice for investors who value simplicity and the ease of automatic investments. In essence, the choice between VFIAX and VOO comes down to a trade-off between cost and convenience. If minimizing costs is your top priority, VOO's lower expense ratio might make it the more attractive choice. However, if you value the simplicity and ease of automatic investments, VFIAX's features might tip the scale in its favor. In essence, the choice between VFIAX and VOO depends on individual preferences and cost considerations. To sum it up, both VFIAX and VOO mirror the S&P 500, providing solid investment opportunities. VFIAX, a mutual fund, offers simplicity and features like automatic investment plans. VOO, an ETF, offers trading flexibility and potentially lower costs. While they perform similarly, VOO's slightly lower expense ratio could tip the scales for cost-conscious investors. In conclusion, both VFIAX and VEO offer excellent investment options, but your choice will depend on your specific needs and preferences.